Hi, I'm Billy Keels, the host of the Going Long podcast. Every week, I'm going to be here interviewing the absolute best in the business as it relates to real asset investing, as well as real Main Street investors. We're going to be having conversations where you can listen in, and that's going to help you to continue on your path to education so that you feel much more comfortable as well as confident in investing long distance. So make sure that you go ahead and subscribe to the channel. Make sure that you're liking it as well, because that way you can get every single episode as soon as it comes out. And by the way, don't forget to leave today's episode a 5-star review. Let's go ahead and listen to today's conversation. Welcome to the Going Long podcast. We're back once again to help to continue to educate you so that you feel more comfortable as well as confident in investing beyond your backyard. I'm your host, Billy Keels. And on today's episode, if you've ever wanted to know what it was like to go from master musician to multifamily millionaire, then guess what? This is actually the entire conversation that you're going to want to listen to all the way to the very end, because today's guest not only has lots of insight in working with high net worth individuals, he was also a VP of acquisitions at his former company where he raised over $10 million on a limited private equity opportunity at $32 million of a Class A asset, actually long distance in Florida. And he's also the co-founder and managing principal of Red Knight Properties. Really happy to welcome to the show, Anthony Scandariato. Anthony, welcome to the show, man.
Thank you so much for having me on, Billy. I appreciate it.
Awesome, man. So I loved our pre-conversation and having getting a chance to know you a little bit. Also, listen, man, similar format every single time. I'm here in Barcelona, Spain. Love living in Europe. Can you help us understand a little bit? Where do you live in the United States?
Yeah, so that sounds good to me right now. I definitely want to take a vacation there. But I live in the United States, and obviously, I think you mentioned before, I live in the New York metropolitan region, specifically in New Jersey. If to pinpoint where I am in New Jersey on a map, it's Morristown, New Jersey, which is about an hour west of the George Washington Bridge, Midtown Manhattan. So okay. Hopefully that helps.
Yeah, it definitely will help. Morristown, New Jersey. Fantastic. Thanks for that. And the other thing, Anthony, help us understand, what is the most positive thing that's happened to you in the last 24 hours?
Most positive thing, I guess, professionally, is it looks like we might be working on another deal pretty soon. Starting to negotiate with the seller, and we'll see what happens there. There's always something positive every day.
Awesome. That's really, really good news, man. And all the best. So thanks for sharing that and getting us started out on the right foot. So look, man, I've given a couple of highlights, but I always love for everybody to understand more about you, Anthony, and kind of share your backstory and give it to us in your own words.
Sure. So kind of the quick high level, you mentioned music. I've actually taught, guitar and piano for a very, very long time. And actually, was considering studying that. Actually was a music major for about a year in college, and I ended up switching simply because I love the business side of things. Whether I wanted to stay in the music industry or do something else, I just got a general business degree. And I had a startup company when I was coming out of my college years. We were in actually the consumer products and retail space. Ended up doing well with that, but ended up kind of taking a back step into real estate because I think we were talking even before the show. For me, I really love the idea of passive income. So basically having assets that are income producing, that basically pay for a lifestyle that meet my living expenses and well exceed that. So started reading a lot of books, and I can get into a bunch of different books that I've read while I was at the startup company. And I just came to realization that I'd much rather be pursuing, a hard asset class with tangible value where you can force the appreciation and, collect cash flow relatively passively, as opposed to, working a 9-to-5, whether, you're a software engineer or even like I was in a startup company, working almost 24/7 and, not even knowing, where the company was going to go. So, it was very intriguing to me. It seemed to be relatively safe from a risk-adjusted perspective. And so ended up, taking a step back from that company, and ended up getting a job in the real estate industry for another real estate operator, or what we like to call sponsors. As you mentioned before, Billy, was, based in New Jersey as well. And we bought multi-tenant Class A office buildings up and down the East Coast. So I started there kind of as an analyst coming out of my startup, and kind of grew into, like the head of acquisitions at that point. I was there for about 5.5, 6 years. So while I was there, I started acquiring on the side with my business partner. He's still my business partner now, but some multifamily product. Started out with 2 families, kind of fix and flip situations, or, buy and holds that we did really well on. And I still own a couple of them. We just started buying together. We bought about 70 units in the northern New Jersey region, meaning apartment buildings and mixed use. So apartments with, ground level retail, apartments above ground level retail. So we built up our portfolio while I was still working for somebody else. So I had the income coming in from that job that would basically support all the investments that we were doing on the side. And it got to a point where we were refinancing, and one building in particular, we doubled the value of the building, and we refinanced all our capital out plus 40%. It was a crazy deal. So
how long did that take you? Sorry to interrupt you, but how long did that take you to
1 year.
Wow.
Yep. So Not every deal is like that. But we got a couple of home runs. So there was 2 of them that were very similar to that while I was still working. And I actually stumbled upon a larger opportunity, a 50-unit property. And I started thinking with my partner, like, wow, this is in the States, and, areas like New Jersey, New York, it can be relatively high pricing, but it depends where you are. So we particularly like to invest, I would say, within an hour of my location, at least to start out with, because you got to build your infrastructure, you got to build your knowledge base. I think that's important. But we're at a point where we're able to apply the knowledge and infrastructure we've learned into other markets, which we're starting to explore. So we ended up stumbling upon this, basically it was a 50-unit opportunity. And my partner and I looked at each other and I said, well, we got to figure out how to make this work, because I was, like you said, I've raised money for my previous job. And I kind of saw how that whole process worked, and understood the numbers and understood what to do, because we were doing it on a big scale for that company, but not from, my own investments with my partner. So we decided to pursue that opportunity. We were able to raise the money. We were able to close. We're actually looking to refinance out of that one too, towards the end of the year. If not, maybe a little bit sooner, before the U.S. election. So we are, blessed to have stumbled upon that deal, because that, for me, was a stepping stone into pursuing my company, Red Knight Properties, full time. Since that happened, we've closed on, we have 260 units in our portfolio, which is about 35 million or so under management, all garden style. For the most part, suburban. We have some infill locations, not that much urban. Apartment communities, 2 to 3 story walk up, class, I would call B-, C+, workforce housing properties, value add. So, we built up that portfolio, and we're looking to grow even more, very strategically. But the most important thing is establishing your track record first before you go way too big. So one thing that I, learned for myself is, if I had to go back and do it again, I would partner up with mentors earlier in the game, because you try to do things on your own, and maybe you'll do well, but for the most part, you almost look back and think you'd want a mentor. So.
Yeah, I think it's Tony Robbins that says success leaves clues. And if you can actually get in touch with someone who's already done it, and you can either ride shotgun with them, learn from them, add value to them, guess what? It can probably help you move further faster. And so that whole concept of teamwork makes the dream work also is one of the things that comes into my mind. So, I mean, you've given us a lot to we could pivot on a bunch of different directions. So you said a number of things that really will resonate with the going on listener. And you talked about being able to you talked about some things about, passive income for lifestyle. You also talked about something called risk adjusted return, which I think is great. You talked about building the infrastructure right before you start moving to other places. And then the tagline that we talked about from the very beginning, from music to multi-million. So having, 35 million under assets under management and over 260 plus doors is great. There's one thing that I do, because as we're getting started here on the podcast, want to help to make sure that no one gets left behind. You talked about a concept that was infill versus urban. So just kind of help maybe someone who's not really familiar with the US. Yeah. What that means.
Yeah. It's kind of a loose term. It's the way I see infill is, it's because we have some buildings in suburban areas that have a downtown, but it's not necessarily urban. It's still a suburban area, but they might have, a main street that has maybe 3 blocks of a downtown. So I call that more infill because it's not urban.
Right.
So.
Okay. All right. Perfect. And so that's helpful. So I do want to so you talked about in the very beginning, right? As someone who studied music and thought about going in that direction, you started in software, I guess also too there, I guess, what are some of the skills that you developed very early on that are helping you to be successful in your company and also attracting others to be attracted to your vision?
Yeah, I think you mentioned vision, first of all, to have a clear vision and to be of the mindset where, you want to be successful, and how do you measure that success? There's a lot of different ways to measure success. One of them would be, in my mind, to have basically a career that supports you no matter what tribulation you have going on in your life, no matter what struggle, you always know if you have an income producing asset, for the most part, in some exceptions, it depends on, hotels are tough, office is tough, retail is tough, for the most part, that will continue to appreciate and it will continue to provide cash flow for generations to come. I don't see, like I mentioned, we specialize in multifamily and some mixed use. So the multifamily, even during this whole COVID crisis, since March, our collections have been 95% plus every single month, including August. We're recording this at the end of August. And I already have a lot of rent coming in for September. So, it's something that the United States, I'm not sure about Europe. I haven't done much research there, to be honest. The United States has a housing shortage for affordable apartments. So that's why you see a lot of conversions happening. You see a lot of rehabilitations for older buildings, just simply because in order to keep up with the demand and population growth in the United States, I think there's a National Multifamily Housing Association. You can just go to the website. It's just type it in on Google, it should show up. And there's a bunch of different statistics there. But I think it was we had to build, it was 350,000 new housing units a year by 2030 in order to keep up with demand. And not new, affordable. So we're talking, moderate, low to middle income apartments. So that's what we specialize in. There's a lot of high rise new construction in the States where I am, especially closer to New York City, because, median income is higher once you go closer. But it's, there is a whole other segment of the United States that people forget about, which is working America. So that's, basically what we like to cater to. It's a great segment to be in my opinion, even right now, during the crisis and coming out. So that's what we focus on. But, there's many different ways to make money in this industry, for yourself and for, at least in my, my opinion, for my investors too.
Okay. So that makes a lot of sense. And also too, I'm a guy from the Midwest. And so when everybody says that the United States is New York City and LA, I'm like, well, no, there's a whole bunch of us that aren't, right? So you also said another thing, you just talked about your collections being around 95%, which is, I'm seeing something very similar, but I guess I would ask, how much do you contribute that due to the processes that you have in place to making sure that you have the right resident in place?
Has a lot to do with it. We're pretty selective from the start, no matter what. So we're, I think we're pretty on top of things. And I think we've been pretty aggressive. Not in a bad way, but in calling every day, texting every day. If we don't hear from somebody, we'll have the super knock on the door. Yeah. I mean, we want to work out deals with our tenants if they're not able to pay the rent.
Yeah, you're staying in touch. Staying in touch because, and I tell all my tenants, I said, the worst thing you can do is to not tell us what the hell's going on. Yeah.
That's the worst thing, because that's when we're going to file an eviction. And you don't want that. We don't want that. And especially right now, because it will have to be paid. But if we avoid that, we work out payment plans with some of our tenants. Like I said, it hasn't been too many tenants, which is great for us and obviously great in general. But there has been a few, but I think we've been very aggressive. I think we've probably every single day just calling and texting and emailing and having the super just do a quick note. It might be a little bit too aggressive, but we want to keep those, for our investors and myself, we want to keep that what's owed to us, paid. So we're always very aggressive with that.
Makes sense. So staying in touch, making sure that the line of communications are open, and that your residents know what you are expecting so that they can know what to expect. Right. And I think that makes a lot of sense. And, there was one of the things in the beginning you talked about, the unicorn properties, right? The one that doesn't happen all the time. And that was a really, really positive story along the way to 260 plus doors. I'm sure that there's been a lot of things in the middle, but I want to go all the way to the other end. Like, tell us about what is the most challenging asset that you brought into your portfolio to date, kind of what because we know about that one other end of the spectrum. So take us to the other end of the spectrum, and kind of why do you feel like it's been the most challenging?
Yeah, I mean, they've all been challenging, but we've been able to turn them around, thankfully, and that's the whole business plan. So they've all had their own challenges. I knock on wood, never lost any money. All our deals have always been from a cash on cash perspective, which basically is, the investment that you put in, how much cash flow are you receiving every year? We've always been north of 10%. Thankfully everything's been going well. I mean, there are challenges. I mean, especially when, you're in a new market and you're learning the eviction process. I'd say you have to really understand that. There's probably some things that we could have done a little bit sooner to understand that. But now we know that moving forward, as we go to other markets, we really want to understand how that process works. Is it is it going to take a month? Is it going to take 6 months? Because that changes the dynamics of the underwriting for the deal.
Definitely. And it's great that you have that foresight going into it, recognizing that every deal has its own challenges and things like that. Completely understand. So kind of help us understand, we'll go back. I want to go back to that vision thing, but since you've kind of teed it up, you talked about looking at going into other markets. One of the things that we're all about here is the Going Long podcast, right? Is going long, helping people to feel much more comfortable and confident investing beyond their backyard. So
sure.
Two things. Number one, what is, you're looking at other markets. Kind of help us understand why look beyond your backyard already. Number one, so, and I mean that literally. I know you talked to earlier to like within a 1 hour radius, but maybe there's a reason for going into a new state or something like that. So help us understand why are you even looking at that as something to go even further into a new market, and maybe some of the specifics on what you're coming into to learning. You talked about, for instance, one thing is evictions, but maybe something else beyond that.
Sure. Yeah. I mean, to be honest, we're looking, I mean, it's mostly right now we have properties within an hour to 2 hours. So it's a little bit further, but, and actually the new properties we're looking at are still within that radius, to be honest. Mm-hmm. But I do get other opportunities from other operators too, because I'll invest with other operators. They have properties, down in like the Southeast Sunbelt states. I think, those are interesting states. We're talking about like Florida, some areas of Florida, yep. Florida, Nashville, Tennessee, looking at Atlanta, Georgia. So like, those states I've done business in from my previous company. So I know them from an office perspective. From multi perspective, it would be kind of, I would say, it's still a learning curve, but it would be easier to wrap my head around if we were to look at anything in those markets. And I think it's to your point, why would anybody want to consider if you're good deals in your backyard. It's a point for diversification. Because if one area of the country isn't doing so hot and the other is, then it's kind of offset. So I think that's the number one reason why we would. But it gets to a point where you have to have infrastructure. So we most likely partner. We self-manage all our properties. So that might not be the case if we were to buy in Atlanta, in Florida. It's going to be more challenging to do that. So that would have to be an outsourced situation, unless I move down to Florida, which is, I'll consider that as well.
All right. So, and we're going to help once again educate the audience here today. So you alluded to it. I'm going to put a little bit of different word on it. Correct me if I'm wrong here, but that means that your company, you have decided to go with a vertically integrated approach. So yes. help our audience understand, when I say vertically integrated, what does that mean, number one, and why have you decided to go that route versus outsourcing?
Sure. So vertical integration is, especially in the infancy of your company, relatively newer company, you don't want to outsource everything. You can think of that way and say, okay, I can really scale up if I outsource everything. There's certain things you want to outsource and certain things you don't. So like for construction, for instance, I don't have any construction people on my payroll. I have supers and I have third-party contractors. That's a whole different ballgame. In terms of the property management, in terms of the collections, in terms of the leasing and all of that, that is in-house. And especially if you're doing value add properties. And what I mean by value add is you're going in, for example, let's say, you're buying a 50-unit building and all the one bedrooms are $500 and the market's $1,000. But each unit needs $3,000 to $5,000 worth of work in order to get those rents. So those are the types of buildings we buy. And I think it's really important because to do it, yourself, to self-manage, number one, it's an advantage from, actually a lending perspective to be a self-manager and from a, financing perspective, but also from an equity perspective too. And, if you're trying to partner with other investors, you have control. You have control over the operations of the property. And if things don't go well, then guess who's on the hook? You are. It's more pressure for you, but you should take the pressure, because if you're taking other people's investments, some people 50,000, 100,000, that could be, a few years of savings for them. You want to make sure that their investment's protected. So for me personally, that's why we self-manage our properties, because I want to be on top of it. I know every tenant. You tell me, hey, who lives in number 11 at Stonewood Apartments? I know who it is. So and what's going on? Did they pay their rent last month? I know all of that. Yeah. I know it's probably too much that I know, but we're still building our track record. We're trying to get to a different level. I think it's really important. And also from a creativity standpoint too, where if you're buying in areas, and this is for your listeners, that are close to Manhattan, close to, very densely populated areas, there's usually some sort of rent control that our government imposed on developers and operators. Fortunately, we operate outside of that scope, but some states are tenant friendly and some states are landlord friendly. So when it comes to evictions, as we talked about, and that's another reason why you'd want to invest out of state is if you're investing in a tenant friendly state, you might want to consider a landlord friendly. And what I mean by that is a shorter eviction time frame, easier to get things done. So you want to get creative, if you're in a tenant-friendly state. Unfortunately, I am in a tenant-friendly state to some extent, but we've been creative. And I don't think property management companies will get creative in order to execute on the business plan unless you tell them to. And I don't want to be, telling people exactly what to do. I want them to think, but they're not going to think like an owner. So. Right.
Yeah. So that, and that makes a lot of sense. You also mentioned something else as you were talking about. You mentioned yourself as well as your investors. So I want to kind of pivot there as we look to maybe ask a couple last questions. But you talked about syndication. It's something that we also talk about here a lot on the show. I know there's a lot of talks. You syndicate, you joint venture, but let's go down the syndication path. So, meaning that you're going to be aggregating capital from other people towards a common or open types of projects. So, what are you finding, Anthony, that is the reason that people are attracted to what it is that you and your company are doing, and why are they wanting to know more about it? I guess, what result are they looking for you to provide them through syndication?
Yeah, I mean, I was talking about track record too, so I think that attracts, investors and other partners. So that's number one. And number two is, how to reach financial independence, how to leave your 9 to 5. You can actually reach that by passively investing. But you got to align yourself with the right operator, and you got to make sure they have a track record. So for, someone who's quote unquote an accredited investor, or even if they're not accredited, it depends on the syndication you're doing, that wants passive income in order to meet their expenses. It's a great way to do that while, also working a 9 to 5 and kind of building up that capital, building up the cash flow that gets them to a certain point that they're able to do that. I have, investors that have done that. So, awesome. But it all comes from results. So you have to make sure you're producing. So I find that, very important. But at the end of the day, I think that's what, most of my group wants. Okay,
fantastic. And that makes a lot of sense. And you talked about there's a terminology you used there. So accredited investor, and just to make sure nobody's left behind. So this is an IRS definition. So you can look that up, and that would affect someone whether they are doing a 506B or a 506C. Are the different types of investors, accredited or sophisticated, that you can work with. So I know we could probably do a whole episode, you and I, on that kind of stuff. Yep. But just to help everybody also to understand what's going on there. So I guess, so you talked about looking into some new markets. I guess what's next for you and your partner in Red Knight Properties?
Yeah, I mean, number one is still producing on the properties we bought, especially the properties recently. Everything's going really well, even during the COVID crisis, to a certain point where it's like, wow, we already got almost half of the rent roll raised in like a month. It's crazy. So, if we didn't get that, I would say let's hold off a few months in order to look at some new projects. We are closing a couple very soon, with a little bit smaller to manage. But just make sure you're not losing sight of your existing investments. If you didn't complete the business plan on one, then don't move on to the next. And if you are going to move on to the next, make sure you have an end in sight for that business plan, and you're almost there, or you're getting close, and it's manageable. Don't take on too much. That's maybe a more pragmatic mind that I have, to not take on a million things at once and see if you can get it all done. I try to just keep growing. So what's next is, just like I said, just keep producing on the properties we bought and making sure we have the ability to take on the next project. So we're looking at a few right now.
Okay. All right. Sounds nice and shiny and bright moving forward. So listen, Anthony, we've talked about a number of things. I want to bring things home now. We like to get into this portion of the conversation, which I like to call the going long final 3 questions. I only ask them if you tell me you're ready. So are you ready?
I don't know. I'm ready.
Come on, dude. You were born ready. I can already tell.
I hope
Here we go.
Let's see how hard they are.
Yeah. So number one, look, I live in Barcelona. I love it here. I'm from Columbus, Ohio. You're in the States. You're in Morristown, New Jersey. And I want to know, man, like, what is your favorite European city, either that you visited or is still on your bucket list?
Italy.
Right on, man. Yeah. Right on. You got a favorite city? Milan, Rome?
Rome, Sicily. Croatia is a pretty cool area too.
Yeah. Definitely very, very nice. We'll take Rome. Italy this time. Rome. So, all right. Very cool. Very cool. Let's see. The other thing is, Anthony, you've had success. I mean, you talked about, opportunity, a specific opportunity where you absolutely crushed it. We're able to get investor capital back plus 40%. You've talked about some of the other successes in building your portfolio. You've shared maybe some of the things that didn't work, but really specifically, I'd like to know, anyone who's successful has typically made just one mistake, or maybe two. But what is one mistake that you've made along the way that you can think, you know what, more than that mistake, I learned a valuable lesson? What is the lesson that you learned from that mistake that you would pay forward so that maybe someone else doesn't have to pay 100% for the same mistake?
Yeah, I think I mentioned it maybe briefly before, but don't be afraid to partner with other people. When I bought my first property, it was on my own, my first 2-family. I still own it. It was actually a great deal. But if I bought it with a partner, I think it would be a little bit easier. Like I bought it, and right away I had to evict both the tenants, and I didn't know what the hell I was doing. So, I think if I had a partner on that, would set me up moving forward a little bit better.
All right. Don't be afraid to partner. So we'll take that. That's good to go. And number 3, last one. What book would you recommend to our Going Long audience?
There's one. It's called there's obviously Rich Dad Poor Dad is great, but there's another one called The Road to Financial Independence. I forget who it's by, but through real estate. Okay. I'm actually Googling it right now.
That's all good. The Road to Financial Independence.
Yeah, I think that's what it's called. It's a really good one. I don't want to give the simple answer of Rich Dad Poor Dad.
Yeah, that's all good. We'll find it if you can find the author. If not, we'll find it and we'll make sure it gets in the show notes.
Great.
So so fantastic. So look, I mean, Anthony, this has been a great conversation, man. You really helped us understand, like we even talked about, you starting your own business, focusing on music, being able to get into software, then getting into the real estate game, being able to help, aggregate millions of dollars of capital for very large projects, thousands of miles away from where you are there in New Jersey, to then being able to take that knowledge, transfer it, build your own business in Red Knight Properties with your business partner. Along the way, one of the things you've talked about over and over is infrastructure, having a conservative mindset, meaning that you're doing things in the interest of your company, your investors, and being able to grow in a more secure way. So you've given us a lot of really great things to think about. You talked to us about, your Rome is your city, and you just wrapped up with the Road to Financial Independence. And I know that there's a lot of people all over the globe that are like, dude, I got to talk to Anthony. I got to get in touch with him. I want to hear more about what he's doing, more about different insights that he can provide me. So help us understand, man, what is the best way for anyone that's watching us on any of the video channels or listening to us on the audio to get in touch with you and your team?
Sure. So we have a special report. It's called How to Leave Your 9 to 5 Through Financial Independence. It's right on our website, redknightproperties.com. If you just go right on it, it'll pop right up. All we need is your name and email. You'll get a free copy there. And then you'll be obviously on our distribution list. And there's, you'll get emails from us periodically. We don't like to spam people, maybe once a week. We have obviously an office phone number on our website. And we have, if you want to join our investor list to take a look at some opportunities, obviously we have to get to know you first. There's like an investor portal on there. You just fill out some information. And we can, obviously get a relationship moving. So those are the best 2 ways. I'm on Facebook, LinkedIn, Instagram, Twitter as well, personally, and also for Red Knight Properties. So any way works.
Perfect. So it sounds like redknightproperties.com is the place to go, kind of the central place. We can also find you on all the different social media channels. And guess what? The good news is we're going to include all that stuff in the show notes. So just check out the show notes, everybody. Listen, Anthony, it's been great, man. I really would like to thank you for joining us today, sharing your insights, your wisdom, and really look forward to staying in touch with you, man. Thanks a lot.
Sure. Thank you, Billy.
All right, cool. So listen, so just a really quick word to all the Going Long audience. Listen, this has been another great episode. Anthony has shared so much knowledge with us. He's given us also perspective on what he's been doing, how he's been able to aggregate capital, do it in a safe way, and actually build a network of people. So look, why don't you go out and share the episode at least with 2 or 3 other people? It will be great, right? And also, Anthony and I would also love for you to leave us a review. We'd love to know what you loved about the episode. What are some things you'd like for us to maybe talk about in the future? And you know what? If you want to leave a 5-star review with that, go right ahead and do that as well. Up until the next time we're back once again, I want to wish you a very great day. So go out and make it a great day, everybody. And I'll see you on the next episode. Thanks.
Wow, don't you love hearing from top-notch experts in the field? You know, when I was getting started, I really wish that I would have had access to such experts. And even more, I wish they would have given me like a really simple list of things to follow so that I could have gotten to my goals much faster and been much happier even sooner. So that's why I've created for you the 7 things that you should avoid in order to be successful in long distance investing. And you can pick that up really easily by going to billykeels.com/7 things to avoid. And also, if you liked today's episode, don't forget to leave a 5-star review. I'm looking forward to seeing you on our very next episode, so go out and make it a great day.